Hello, I'm Lelda Smits for the Finance News Network, and joining me from the Housing Industry Association is its Chief Economist, Harley Dale. Harley, welcome to FNN.
Thank you.
Australia's property market has had a stellar run over the past year, but how much momentum do you think is left in these gains?
Look, I think there's a bit of momentum left in the Sydney market and in the Melbourne market, which is your two prominent sources of growth. But I think we've seen the biggest run already behind us. Growth is going to continue, but probably slow, I would suggest, over the second half of this year and into next year. So momentum to come, but the really big gains are behind us.
Now, part of the drive behind the year's property price gains has been record low interest rates. Where do you see interest rates heading this year?
I think rates are on hold for the rest of 2014. So that in itself is a positive for property investment, obviously. We've got record low interest rates, or near record low interest rates, depending on your source of borrowing. That's been a great boon to property investors. It's really driven a lot of the demand that's come through, particularly the pent-up demand here in Sydney. But over time, I think people have woken up to the fact that interest rates aren't going to fall any further, so that in itself means people know that the next move is up, not down. But when that move occurs is probably 2015, not 2014, and probably pushed out a little bit by a reasonably tight federal budget.
So Harley, how does your forecast for interest rates impact your outlook for the real estate sector this year?
Well, we've factored into both our outlook for new home building and renovations activity and our general view on residential property prices, the fact that low interest rates will be available for the remainder of 2014. So fixed rates will remain low through a predominant part of that time, even if they rise a little. Variable rates will remain at their near record low levels that they currently are. But over time you are going to see that tightening impact come through, probably from around the middle of 2015. And as people anticipate that and then actually see that occur, that's what takes some of the momentum out of the rate of growth, if you like, in property prices that I think we'll see in the 14-15 fiscal year.
Rising house prices have forced a lot of new home buyers out of the market. What would your best advice be to those struggling to enter?
Look, I think the key thing is to recognise we do live in a different environment now post the global financial crisis. There is a much higher requirement for a demonstrated savings record. I think the bar is higher now than it was for people aspiring to get into property for the first time that are looking to get a loan. So that focus on savings, that focus on a strong record is very important. And I think also bear in mind that there are thousands and thousands of property markets out there. They're all doing different things at the same time. Sure, in an aggregate sense, Sydney seems to be moving very strongly. Melbourne's moving quite strongly as well. But even within those markets, if you do your homework, if you do some research, you do find property prices that are more commensurate with being on perhaps a lower than median Australian income as you're entering the market, than are sometimes implied by these headline median prices that we necessarily need to focus on.
And for those investors hoping to make money from the boom times, which areas do you think are likely to show continued growth? Most
of the price growth in Australia at the moment is being driven by the capital cities, but you've got lots of regional centres out there, the mid-north coast of New South Wales, for example, the Sunshine Coast in Queensland, that have been quite dormant markets, if you like, for some time. There hasn't been a lot of price action, but things are starting to pick up again. They're relatively affordable markets compared to where they were 4 or 5 years ago. In the case of somewhere like the mid-north coast of New South Wales, they're relatively affordable if you're looking in the context of capital cities versus those regional areas. And it's worth looking at those kind of investment opportunities outside the capital cities.
Harley Dale, thank you for the property outlook from the Housing Industry Association.
Thank you very much.